news hit, of course, the entire spectrum of corporate India and sovereign India, S&P has upped the outlook on India to stable from negative. It hasn't yet changed the rating. Usually what this means is that yields on Indian corporate bonds in the secondary market globally should move lower, and Indian companies which are freshly seeking to raise forex loans should be able to raise those loans more cheaply. So, will the S&P action lead to a flood of external commercial borrowings or forex loans? We have Anant Narayan, the Managing Director and Regional Head of Fixed Income and Currency Trading South Asia for Standard Chartered, joining us. In a bit, we'll hopefully get Gunit Chaddha as well. Anant, thanks much. Well, first and foremost, did you see at all a fall in the yields of already trading corporate paper in the market?
Well, Lata, the yields have been coming off over the last few days. So ever since the budget, in fact, we have seen a contraction in the spreads. And it's also been across the globe, to be honest, not just for India. But going forward, medium term, this is definitely positive news. From a pure investor perspective, the comfort that one would have in investing in Indian paper would naturally go up, given that now all the three major rating agencies, S&P, Moody's and Fitch, now have a stable outlook on India. So the chances of a downgrade at the moment are pretty slim. So, the ability and the comfort in holding on to long-term Indian paper, especially the high-grade ones, would obviously be, would increase over time now.
Okay. Well, Gunit Chaddha, CEO and Managing Director of Deutsche Bank India, just joins us. Gunit, we were just talking to your former colleague Anant. What's your own sense of this S&P outlook being revised? Do you think it makes onshore money, or rather offshore money, suddenly cheaper than onshore money? Could this trigger a flood of ECBs into India?
Well, I don't think this event in itself is going to be the turning point to get more Indian companies and Indian banks issuing paper overseas. I think it's a combination of many events: the global stabilization, the volatility having come off. This S&P event certainly helps. And yes, I do believe that Indian companies will approach the global capital markets in size. And I do believe Indian banks will take the advantage of spreads having come off by 20 to 30 basis points over the last few months. But this event in itself may tighten spreads marginally, but it's not going to be the defining thing.
What is the difference between onshore and offshore money for, say, a AAA manufacturing company at this point in time, Gunit?
I still think there is, depending on the company, and depending on the tenor you're talking about, I think there still is, for longer term money, there would be a compelling advantage to go offshore, especially if you want to raise it in size. I also think that many Indian banks would be running sort of into their prudential limits in terms of company and group exposure limits, especially on the infrastructure side. So companies would like to make sure that they keep some powder dry on the domestic side while they go global. So yes, I do expect high yield issuances. I do expect investment grade issuances coming out of Indian banks and Indian companies.
Well, Anant, actually a similar question to you. One of the things that has made sovereigns, and even for that matter the credit market, still slightly not terribly attractive has been this entire Greek episode and the fact that it could be quite contagion. Assuming that gets sorted out in the months to come, do you think that sometime in maybe the first half and perhaps more clearly in the second half, you could see Indian paper becoming very, very attractive? Do you see something like that 2007 kind of ECB flows, at least something of that kind happening in 2010 at all?
Well, clearly the markets have improved over the last few weeks and months, right? There was a time in the middle of the crisis when, it became very difficult for corporates to raise money overseas. Onshore funding was clearly cheaper. That gap has narrowed. Of course, a lot of it depends on a name-to-name basis, but clearly that gap has narrowed to a large extent now, so much so that there's not much of a difference for the average corporate onshore or offshore. Going forward, what one has to remember is that Indian spreads typically quote anyway tighter than a normal BBB minus anywhere else in the world. So, there has been appetite for Indian paper. Plus, there is supply on the anvil for Indian paper as well, especially amongst the high-grade ones, whether it's banks, whether it's manufacturing companies, whether it's for acquisitions overseas, and so on and so forth. So we've got to keep that in mind. Having said that, the events of the last few days have clearly been a positive. The S&P outlook change is clearly icing on the cake. Things like Greece and pigs and so on and so forth obviously are things that one needs to worry about. Hopefully the impact on India, even if there was a recurrence of issues there, would be low, given that the size of our debt, especially the sovereign debt overseas, is quite low. Bulk of it is a domestic debt. So those issues shouldn't really rub off onto us.
Well, FII flows into India, into Indian equities, do have an appreciating force on the rupee. But in the past 4 years, if you looked at the huge jump that the rupee takes in leaps and bounds, say towards that 39 mark, as and when it had happened 2 years ago, it was largely because loans became a big factor. Gunit Chaddha, do you think that is on the anvil at all sometime in 2010?
Well, our view is more the consensus view that we will see rupee tighten, and we will see rupee tighten in the 4 to 5% band per annum. We do think that their flows will help to tighten that, but to reach the level of 39, which you are suggesting, is probably still a few years away.
No, I'm not suggesting 39. What I'm suggesting is a quantum change in the dollar rupee.
No, we think that the change will be more graduated and the change will reflect the 4 or 5%. But what you will find is that appreciation of the rupee will probably be sustained over the next few years, barring any unforeseen circumstance. And the only unforeseen circumstance which we can see right now is crude sort of went way out of whack. But otherwise, we think that ours is very clearly as Deutsche Bank the consensus view on the dollar rupee side.
Gunit Chaddha, thank you very much for joining us. Anant, if I may keep you for just a couple of more questions, what is your in-house view or your own personal view on where you see the dollar, say, by June 30th or December 31st?
Our view, Stanchart's view for December 31st dollar rupee is 42. We've been maintaining that for a while, and the S&P news yesterday obviously just helps buttress that particular case of ours. The point you made about will ECBs be the fresh flow of dollars coming into the system which will lead the next wave of rupee appreciation? Well, tough to say. There is a possibility that local rates might go up given the monetary situation and given the growth and so on and so forth, at which point of time maybe corporates would see value in going through ECBs rather than local borrowings. Having said that, given the experience that we had previously of rupee moving from 40 to 50, I would think a lot of corporates, even if they do choose to go through a ECB route, would probably hedge the dollar rupee exposure, at least a part of it. To which extent we shouldn't see unbridled appreciation purely on account of ECB inflows.
All right. Anant Narayan, thank you very much for joining us with those thoughts. Well, not quite 39, say our experts, but even 42 is quite an appreciation from here on. That bears watching. Well, IT companies will not be very happy, but one guy who will be happy would be perhaps Bharti. The amount they're borrowing from Zain would perhaps be less of a burden on their balance sheet if this is how dollar rupee is moving.